Kiwi dollar daily forecast, January 11th, FXEmpire.com. The Kiwi dollar rose during the session on Tuesday as traders bought risk around the markets. The Kiwi is always a favorite of currency traders when times are perceived to be good, and a currency that is sold off rapidly when there is economic trouble on the horizon. With the recent headline issues coming out of Europe, the pair has actually produced a fairly steady move up, which is somewhat counterintuitive. The pair will also be heavily influenced by the commodity markets, and in particular the agricultural markets, as New Zealand exports so much in that field. The pair looks like it wants to build momentum, but there's so many potential headwinds out there that it'll more than likely have issues in the near term. The 80 level above is the top of the next resistance area, and this could be a place for selling opportunities if the market gets spooked by some type of headline. Remember, there is a gap from November that is still open. It hasn't been filled, and that's a pretty rare thing in the Forex markets. With that in mind, we think that this 80 area could be where we see an attempt to do that. Of course, we need to have some type of event to trigger a sharp move down, but exhaustive candles, nonetheless, at 80 do get us interested in selling. In order to buy this pair, we would need to see a daily close above 80, which would signal that perhaps the momentum has built, the trend has continued going up, and the sellers are starting to get beat up a little bit. We're presently looking for daily or 4-hour signals in this area. And at that moment in time, will not hesitate to sell, as it should produce some type of result. And if it doesn't, that's fine. It's a big enough signal that we know it means it's time to reverse and perhaps try to pick up a few hundred pips to the upside at that point.